I'm Christina Cantu Thompson, and I am covering the analysis, a global regional analysis on the prominent Mercosur countries. Figure out how to move. In this overview, I'll be covering a general description, the economic environment, cultural environment, political and legal environment, financial environment, infrastructure, and marketing information. So Mercosur stands for the Southern Common Market, however that's in Spanish and Portuguese. So the Southern Common Market was established in 1991, and it was created through the Treaty of Asuncion, which called for the free movement of goods and services between countries. This eliminated customs duties and implemented a common external tariff, which is 35%, and adopted similar trade policies over the region. The countries that are included in this area are Argentina, Brazil, Uruguay, and Chile, although since the original, since 1991, some other regions have been, some other countries have been added. But here is Argentina, Brazil, Uruguay, and Chile. The population in these countries, Argentina has 44 million, Brazil has 209 million, Uruguay is 3.5 million, and Chile is 19 million. I think I've spelled Chile wrong through this whole presentation. And the U.S. is 300, compared to the U.S., which is 328 million. So some relevant trade statistics of the overall area. Argentina imports about 50 billion, exports 65 billion, and the U.S. goods and services that trade with Argentina total 23.3 billion. And let's see, in 2019, and the exports were at 15.7. Oh wait. So this is just broken down, the imports and exports. So for Brazil, it is 175 billion, 200 exports are 225 billion, and the U.S. was 105 billion. So a good portion of that. Uruguay is much smaller, has a much smaller economy and population. So they're right here on 8 and 7 for imports and exports. That's in the billions. And the U.S. trade was 1.6 billion. And then Chile is around 69 billion for imports and exports. And with the U.S., exports were 21.3 billion and imports were 13 billion. So the main imports and exports of the region, oil cake and soybean products were big for imports. And then exports were also soybeans and petroleum products. In Uruguay, they exported a lot of cow products. And in Chile, their main export was copper ores. And all of Brazil, Uruguay, and Chile all imported a lot of petroleum products. So some trade history with the U.S. is that, like, Argentina established diplomatic relations with the United States in 1823 following Argentina's independence from Spain. And so they've had a bilateral trade relationship since then. With Brazil, they also enjoy political and economic relations. And the United States was the first to recognize Brazil's independence in 1822. Uruguay established diplomatic relationships with the United States in 1867, but there's been a lot of things that have happened in Uruguay since then. And then Chile, oh wait, I went the wrong way. Chile, the U.S. government supported the democratic practices in Chile in the 80s and 90s and helped create a democracy. So the U.S. has a lot of interest in Chile, and the two countries frequently consult on mutual issues. The United States and Chile have had a free trade agreement since 2004 that allows the export to Chile of 100% of U.S. consumer and industrial goods duty-free. Talking about the economic environment, the per capita income for individuals, so Uruguay has the highest per capita income, then going on to Chile, Argentina, with Brazil being the lowest. But the income distributions, and these are Gini coefficients, so 0 is the most equitable, and these numbers represent the distance from the mean. So Brazil has the highest Gini coefficient, so Brazil has the highest disparity in wealth between poor and rich, with the lowest going to Uruguay. So the general state of the economies, some of the countries had an annual economic growth rate of more than 8%. In South America itself is experiencing rapid economic development. But the Brazilian economy specifically is growing at a slower rate, and is also considered to be one of the poorest countries. So the economic development of South America, like according to the exchange rate, it's heavily dependent on the exports of goods. And the economic exchange rate, Brazil's total exports were followed by Chile's and then by Argentina's. And although they're all developing countries, only Chile, Argentina, and Uruguay have a rich standard of living. So Chile is considered to be expected to be recognized as the first developed country in South America before the end of the century. What's significant about this is that all of these markets are growing, and there's a lot of money being moved around. There is a lot of opportunity for investments and a large market for business. So 448 languages are spoken in South America, and all 4 of the countries in the prominent Mercosur countries, they all speak Spanish, and all but Chile speaks Portuguese. And then they also speak English in Argentina and Chile. But what's interesting is that there's also a lot of indigenous languages that are spoken in the prominent Mercosur countries. And for example, Quechua is spoken in Argentina and Brazil. When speaking about religions, most of the prominent Mercosur countries are primarily Christian. And except for Uruguay, which, well, it's still a majority, 57%, but look at Argentina is 85% Christian. Most of that is Catholic. Brazil is 88% Christian, along with Chile. and Uruguay is 57% Christian. Some of the other religions that exist are Judaism and Islam. So there are some definite differences in business customs in the prominent Mercosur countries than in the U.S. And some of those are like in Argentina, they will have long animated negotiations that and the spoken word is very important for communication and contracts, and they identify with the European style of business. But in Brazil, they are very passionate and exaggerate early on in the process of negotiations. Their presentations, they talk about how they should have flair, and who you know is very important. In Uruguay, the meetings are extremely formal, but they don't start on time, which seems to be a common theme among prominent Mercosur countries. So kinship and friendship play a major role in business transactions. And in Chile, may be more formal, but sometimes your pedigree and who you know may be more important than your expertise. Also in Chile, interruptions can be considered a sign of interest. The marketing impacts of the cultural aspects depends on where you are and where you're doing your business. The international marketer needs to be made aware of the cultural differences. For example, not to get flustered in a long showing negotiation or very long late starting meetings. It may not be rude. It's just the way business is done there. The political environment is kind of new and very charged. So Argentina is ruled by its 1853 Constitution. Their basic structure is federal and republican, and it's more like a federal union of provinces. Brazil has endured centuries of political unrest, discrimination, and slavery, and now enjoys a democratic government with formal elections. Uruguay has a constitutional democracy with a political system like the U.S., and Chile is also patterned after the U.S. with 3 branches of government. They are liberal economic but have a socialist ideology. All member countries maintain free trade policies with each other, and these trade agreements help the flow of imports and exports to the bloc. This would allow a company to gain an edge towards competitors. Alternatively, leveling products at market price would create a higher gross profit. When talking about customs regulations, the exports of goods, except agriculture and oil products, are exempt from value-added taxes, but subject to export duties at 5%. Those like agricultural products that are exempt from value-added taxes are subject to export duties from 5 to 48%. And these are imports and exports outside of Mercosur countries. The maximum rate of imports from outside is 35%. And this amount was established for member countries of the World Trade Organization. The money and exchange rate used in the prominent Mercosur countries: Argentina has the Argentinian peso. $1 equals 95 pesos. Brazil has the Brazilian real. $1 US dollar is 5.06 Brazilian reals. Uruguay has the Uruguayan peso, which 43.46 equals 1 US dollar. And the Chilean peso is 734 equals 1 US dollar. The financial implications of this area, the regional process, low inflation, high gross national products for the next years, attract more international companies to the Mercosur countries. This level of interaction will help the development of new products and services, will increase marketing, and will change the way consumers do business in these countries. Part of the Mercosur bloc initiatives have been to develop infrastructure, including roads, bridges, telecommunications, cell towers, and internet. They are seeking additional digital expansion through these initiatives to strengthen digital integration. 70 to 76% of the region have internet access. 269 million users participate in e-commerce, and there is lots of opportunity. These markets are growing and expected to continue, which gives many opportunities to businesses to invest and operate with low costs and higher profits. There's a large U.S. presence in the Mercosur countries, and some of that presence can be found, especially in Argentina, with tech development. Tech is going to be, it's prominent on the market now. They need it for their infrastructure and for the development of their initiatives that they have to increase their connection of the internet and telecommunications, and Salesforce, Oracle, Eventbrite, SAP, Google, IBM are all in the Mercosur countries. There's major opportunities also for consumer goods, foods, beverages, and retail. But there are some current issues that marketers need to be aware of. Currently, politicians in Brazil and Argentina are presently embracing populist and political positions that appeal to their populations, but it's not as appealing to the foreign investments. It could be bad for business, and the international marketer should be aware. So, overall, the prominent Mercosur countries are a really good place for the international marketer to get started doing business. There's lots of room to grow and lots of places for the marketer to work. And so these markets are open and ready, and I think that the bloc has really helped these countries develop and get themselves established with foreign and domestic investments. Thank you.